Hello, future millionaires, and welcome back to the Get Rich Slow podcast. We're your hosts, Adrian Shermer, Rob Delavan, and Lance Johnson. Good morning, gentlemen.
Good morning, Lon.
I know I'm tripping over myself here.
I've been
Mr.
called
Brilliant.
a lot of different things, but never long.
Let's just say Mr. Brilliant at the basics, not Mr. Late to Lunch, Lon.
I love it. I love it. This is part 5 in an 8-part series on the home buying process. We're going to talk about both ends of the spectrum here. And Rob, let's start off with you. I'm real excited about your news.
So a quick success story for you guys is I actually sold a personal house in the last week. And it's one of those things that, clients and prospective folks and that sort of thing, when real estate brokers start selling houses, the market's hot. So we could dig into that on a whole nother episode, but it was a nice episode. It was a nice situation where, hot market, and it was the right move. So.
And it was not only a real estate move, but it was also kind of a tax move too.
Oh yeah,
We kind of discussed. So
yeah,
it's a good story that we can uncover sometime.
Yeah, tax and frankly, it was financial planning just as much. So there's a lot of moving parts on that one. So yeah, we can unpack it. But it was a success. Sold, done.
So upcoming events that are coming, we have the Sip and Mingle. That's at our Lake Oswego office on April 22nd between 4 and 6. So people that want to come, bring a friend, or I think we can host about 75 people. I think there's about 50, so we have some room to have. Just let us know that you're coming. Get on our website, ry-fa.com/events.
Awesome. That'll be a fun one.
Great. And if you guys want to find us online, you can jump on the podcast website, the getrichslowpodcast.com. It's got links to our event site, to our individual businesses sites. You can find us on there, and you can contact us if you want more information after this episode. And about this episode, today we're going to be discussing financing the home purchase based on some statistics. What we're pulling from, again, we love using this as a source because it's got a wide range of information. It's very accurate. The National Association of Realtors, this particular stat, we're going to be getting data from the July 2020 to June 2021. That's the latest release from them. The information provided gives us an understanding from a consumer level of the trends that are transpiring. And that's really what we want to look at, zoom out of our own little world and look at big data.
Okay, so the first question, Lance, I want to throw this one up to you, is based on the statistics from the NAR, which is the Association of Realtors report that we've discussed already. And by the way, that will be in the show notes and disclosures and so forth for reference purposes. 29% of buyers said that saving for a down payment was the most difficult step in the process. So just about a third of people. How can you help clients be more prepared for home purchasing?
So that's a really good question. There's a lot of different answers to this. So I'm going to kind of go through a couple strategies, and it depends on the client, obviously. So let's use an example of a Nike Intel client, Columbia, where they have an ESPP and some RSUs or non-qualified stock options. So when those vest, or they're in a position where the clients own them, a lot of times they just stay in a brokerage account or an account with the company that works with a custodial account, and they don't really have the ability to access, and a lot of them don't want to sell those shares, right? Because there's tax. Well, you can move them to a brokerage account, get a margin, which is a margin loan account. It's kind of like a HELOC to a house, and you could leverage without selling to put the down payment, especially if your cash flow is good. So a lot of these strategies I'm going to talk about are always going to be brought back to cash flow, taxes, and financial planning, because we will prepare clients on how they would pay off that down payment or that leverage. People that have dual income earners, they both have 401ks. Most 401ks have loaning privileges up to
Right.
50,000 apiece.
Right.
There are some things, and not every bank, not every broker has this ability, but you can do, and we want to try to get 80% down. And so if you can do 80% down with a little bit of leverage up
Oh,
front.
you mean 20% down, right?
Sorry,
Yes,
20%
20.
down. my
Yes,
bad.
the opposite direction.
Right,
There
opposite
you go.
direction. And you loan 80%. If you could come up with that short-term 20%, you're going to get a better interest rate than if you try to do an 80-10-10 or an 80-15-5. And Adrian knows more about this, but not every broker can do, has that ability. And so that's
True.
sometimes, you get led in the direction that, and so, or you could just put 5% down, but then you're paying mortgage insurance. Well, and so you kind of have to look, outside the box a little bit. And, it depends on if you're moving to the next home and you're going to make your current home a rental. So before you put it up for market or put it up for rental, go get that home equity line of credit on your existing house. That can help you,
Right.
So there's a lot of different ways that you can come up with things to, I don't want to say game the system, but play the system that give you the best interest rate, which is what our job is. And Adrian's job is, how do you get the loan so you qualify, but how do you prepare for these? And then at the end of the day, we have to look at cash flow to make sure that you're not over leveraging like happened in 06, 07, that you do, what would happen if you lost a job? Do you have good reserves? Things
Right.
like that.
Right.
So
Yeah, I use that same term too, and it's probably a misnomer, game the system, but it's just playing by the rules. And once you know the rules, you should take advantage of what works in your favor. And you mentioned margin loans. We also have 401k loans. I see those too. That's in a way, a similar product for lending purposes. In most products, in your qualified mortgages products, your conventional loans and your normal stuff, you don't have to count the payment on that, if there is one, against as part of your debt to income ratio. So that can be a really cool way to utilize pulling money without really pulling it out of your investments and getting the benefit on both sides.
yeah, and then there's other things where sometimes you want to get that cash in your checking and savings 2 months in advance of getting qualified. So a lot of times that doesn't happen. So sometimes just getting everything in order, knowing where you're going to be, finding out what would happen if one of you lost your jobs. Those are all important things so that people don't get leverage and you don't have an 07 happening again. And that's very important to us as financial advisors. We don't want any clients to have to file bankruptcy, so that's not a good play.
Right. And I mean, I guess what I'm really hearing from both of you on this is the key word here is prepare.
Yeah.
And this is something that you want a takeoff point. It's not, hey, guess what? I was thinking, Lance, I'm going to buy a house tomorrow. Hey, Adrian, same thing. No, give yourself some runway, right?
I think if you're going to buy a house in June, you should start planning January. Some people don't really think about it until April comes along after tax season, and you can scramble to get things done, but it's not ideal. So
it's a lot harder. Yeah.
So Adrian, how do you advise your clients to prepare for the costs associated with financing a home purchase? Can you comment on that?
Absolutely. This is one that of course, we do a lot of preparation for these episodes, and this is one that I had to chew on for quite a while. Like most of our answers, it's a your mileage may vary thing, and it really depends on each client's individual needs. But what a lot of people don't remember is that there are closing costs associated with a home loan. And in a lot of, this is a national podcast, so we have to appreciate that people are in areas that have very different taxes. I used to write loans nationally when I worked for one of the major national banks, and I started in this industry. New York, for example, very, very high taxes. Taxes are a huge chunk of the closing costs because you're paying the seller for the remainder of taxes for that tax year that they had paid forward when they paid. And then you're earmarking enough funds, typically in an account, your your account for taxes and insurance to make
Escrow.
sure you've got enough in there, your escrow account. Yeah, thank
Right.
you.
Yeah.
So, in the Portland market, where we have, especially right in the metro, where 500,000 and up homes are not uncommon, a lot of times that's a $10,000 amount of cash that I'll recommend, because I like to typically overestimate. But yeah, your mileage is going to vary a lot. You've got to run the math for what you're looking for. And as Lance alluded to, down payment is another huge factor. And I have clients where we sometimes play with different ideas. Lance, I think, especially you're working with, as a financial advisor, your typical client has a bit more cash in reserves, or they might be going for that second home rather than that first time home buyer. And that answer is just going to be very different for each person. And you even have the ability, not a lot of people know this, but after your offer is accepted, you can change the terms. So sometimes we come in with a larger down payment, but then midstream, and I say midstream, but really in that first week, you want to kind of lock in this sort of stuff because you don't want to have too much movement beneath your feet. But sometimes we explore those options. Another great example is people who want to improve a home. If you buy a home, especially one that's got, you're going to expand the footprint of the house, you're going to make some sort of major renovations, you might want to have more of that cash free. So you go with a lower down payment, and you're going to be paying that penalty of having the mortgage insurance on there short term. But mortgage insurance can be canceled, and canceled even sooner than it normally can. The turn times on that reduce when you make major improvements to the home that you can document. So again, looking at the big picture, and just depends on how you want to play the game. Lance, again, though, very right. Many people, especially when it's not their first home and they've got more capital, or they've got equity that they're rolling from the home that they're selling, they're going from the starter to the we're going to raise our family home, then hitting that 20% mark has a lot of advantages. Not having to worry about mortgage insurance and when that's going to roll off, or what the market's going to do and how long it's going to take.
And you mentioned taxes, and of course, different states. That primarily for closing cost is property taxes.
Property tax,
to be very specific.
Yeah, good point.
Yes, there's.
We just rolled off our big kick with Sue on our last episode series. So
Yes.
yeah, property taxes, homeowners insurance too. We have people who grab coastal homes. The insurance can be much higher than I'm in a subdivision over here. I pay less than $400 a year in insurance because I can see the emergency room from my window over here. If you got a place on the coast and it's got a pool on it, you might pay 10 times what I'm paying. So you've got to know for your specific property how these factors are going to run in.
Yeah, when I look at your situation and the cost, and we refer to as gaming the system, I kind of refer to it as like, I'm ready to show up and I want to know if I'm playing hockey or football. I want to know what the right equipment is.
Mm-hmm.
And, you don't want to show up with hockey skates and you're going to play football, or vice versa. So gaming is just planning. So gaming is really referred to when you're kind of trying to strategize and backfill and you're kind of scrambling. Preparation and planning is, hey, I'm coming up with the ideal outcome based on a certain set of circumstances, and I'm just best utilizing the resources I have available to give me the best outcome on a product. So,
and I would say that's probably the biggest difference in working with someone who's typically has experience and a track record. They're buying a home and they've been working with a financial advising team for a while, versus it's the same thing. What you're creating is that runway, that plan. You're really actually working towards a goal and putting a piece of that ownership, that move up, that move down, whatever it is that you're doing. All of those things are taken into account well ahead of time with somebody who's been working with financial advising.
One thing is, it's a seller's market. So, sometimes you have to buy a new home, remodel it. There's not that many contingent loans nowadays with multiple buyers, right? So what ends up happening is you got to get all that in place and kind of figure out. And then what happens when things go south? Are you prepared? Do you have a backup or a reserve? In my 30 years, I've only had 2 clients go into foreclosure, And unfortunately, they were real estate agents. And because they got over leveraged because they believe that, real estate's the only way you can make money, but real estate's great, but it's hard to get money out when everything goes south. So preparation and planning is always helpful. There's nothing worse than watching a client really fret over and reduce their savings and their traveling, their lifestyle because they're house poor. That's an awful way to go. It's just too stressful. So we try to prevent those things.
All right, Rob, I want to pull you in as well. According to the National Association of Realtors, buyers continue to see purchasing a home as a good financial investment. How do you educate your buyers along the way to make sure that they are getting the best bang for buck?
Well, this is frankly, it's an easy one.
Oh, good.
Do a good job in the purchase, and you get into a price point where you're setting yourself up for time. That's kind of the canned response. I want to dig into it a little bit more than that. According to the 2021 highlights, which and it's page 9, and it's under financing the home purchase. It specifically says buyers continue to see purchasing a home as a good financial investment. 86% reported that they view that home purchase as a good investment. 86%, this will be documented below. And folks are saying that having a home is part of what they think is being a positive thing for building wealth over time. So I can't argue with 86% of people. What I can do is basically set them up as well as possible in the actual purchase. And part of that is everything we've talked about before on this episode, which is know the numbers, have a plan, don't get yourself into a house poor situation. Know what, just because you can afford it, does that mean you should? All of these conversations with the financial advising, the tax side, the lending side, so forth. That's the biggest piece of education up front of, okay, know what you're getting into. Then the best bang for their buck, when you get into an individual transaction, which that's where, like you said earlier, Adrian, mileage will vary for everybody.
Sure.
You get into an individual transaction for a specific person. Let's say it's a client of Lance's and they're super dialed in on all of these points. And then the actual property that they turn out loving is a total left field renovation. Or, oh man, the price point is very different from what they had planned on. Or, I mean, there's so many different things that can happen. Or, that equity line didn't work out. So what was their backup to that? What was the backup to that? Getting the best bang for their buck is having contingency plans, plan A, plan B, plan C. If this, then this, if this, then this. And that's the piece where if you're going to get a bang for your buck, you need to have resources to tackle when that opportunity comes up. Lance, you said, hey, we don't get very many contingent sales right now in this seller's market. Well, you're right. It's a much smaller percentage, but we have gotten them. And when it comes up, when somebody decides, oh, hey, I actually want to stretch because I found that perfect house, but it's actually on a little bit of acreage versus not. This, instead of a 3 to 5 year play, this is now a 20-year play. Well, what's that look like? So just being able to, hey, there's a property that hasn't been popular because the finishes just suck. Like 1983 called, and once it's paisley border around the kitchen, you remember those things that were right up at the top. Everybody's grandma had one from the 70s and 80s, and it's turning people off. But it's a great house.
The carpet you have to rake.
Yeah, right. The green carpet. So it's just that's the key. Is you have to have a plan. You have to have resources. The more resources you have, the better bang for your buck you're going to get, especially in a competitive market, which we could see a change very, very soon. I mean, this is spring of 2022. Who knows? None of us have a crystal ball, but interest rates are, in the high 4s, low 5s. And 6 months ago, it was very, very different. So there's a lot of different things that need to be considered. But I'm never going to be able to totally wrap up with a bow that answer. It goes back to mileage may vary, but I'm telling you, you're going to get a hell of a lot more mileage out of having a plan, having your taxes dialed in, having your lending dialed in, just being smart with your finances, which means you have that team that you're pre-educated. So that's the long answer to a medium-sized question. Sorry, guys.
A lot to
You're
unpack.
on a roll, on a roll.
Lance, would you like to see us off?
So that wraps up our financing for home purpose episode. Please stay tuned to our next episode of the 8-part series. In the next episode, we'll be learning about home sellers and their selling experience. So look to our websites for the visual PowerPoint for this, and we'll see you next time.
See you next time.
Thanks so much.